Hello students, under session 10 of unit 2, we will be discussing about statutory provisions in preparing the financial statements of a company, and we will also be discussing about the general instructions which have to be followed for preparation of balance sheet. Like we already have discussed in the previous session, final accounts of a company comprises of two main statements, one being the balance sheet, which is prepared at the end of the year, which discloses the financial position of a company, and the second being profit and loss account, which also discloses about the results of operations of the company. There are certain statutory provisions regarding preparation of company's final accounts. A company is under legal obligation to keep proper books of accounts and to prepare its final accounts every year in a prescribed manner. There is no such obligation upon sole proprietorship or the partnership firms to prepare final accounts, but companies have a statutory obligation to prepare final accounts under the section 210 of the Companies Act of 2013. Now, let us have a look at the statutory provisions in detail. Section 209 speaks about the books of accounts should be maintained on accrual basis and according to the double entry system of bookkeeping. Section 210 tells us about the provision that is it deals with the presentation of final accounts of a joint stock company. Section 211 of the Companies Act of 2013 deals with the form and contents of balance sheet and profit and loss account. 212 section speaks about disclosure of certain particulars in the balance sheet of a holding company in respect of its subsidiaries. 214 deals with the rights of the holding company's representatives, and section 215 speaks that the balance sheet and profit and loss account of the company shall be authenticated by not less than two directors of the company or secretary or manager of the company. These are the statutory provisions which are provided in Companies Act of 2013 with respect to the preparation of final accounts of a joint stock company. Now, let us look at the general instructions for preparation of balance sheet in brief. One being an asset shall be classified as current when it satisfies any of the following criteria. The criteria being if it is expected to be realized in or is intended for sale or in consumption the company's normal operating cycle. This is being the first criteria. The second criteria is if it is held primarily for the purpose of being traded. And the last criteria is if it is expected to be realized within 12 months after the reporting date. So, any of the assets which fall under one of these criteria mentioned above will be classified as current assets, and all other assets will be classified as non-current assets. So second instruction in preparation of balance sheet is an operating cycle is a time between the acquisition of the assets for processing and their realization in cash or cash equivalent. Where the normal operating cycle cannot be identified, it is assumed to have a duration of 12 months. Next, the third instruction is a liability shall be classified as current when it satisfies any of the following criteria. The criteria being if it is expected to be settled in the company's normal operating cycle. Second criteria is if it is held primarily for the purpose of being traded. Third criteria being if it is due to be settled within 12 months after the reporting date, or the last criteria being if the company does not have an unconditional right to defer settlement of the liability for at least 12 months after the reporting date. is known as current liabilities, and all the other liabilities which doesn't fall under current liabilities is classified as non-current liabilities. Then the fourth instruction is a receivable shall be classified as trade receivable. It is in respect of the amount due on account of goods sold or services rendered in the normal course of business. The fifth instruction being payables shall be classified as trade payable, as in it is in respect of the amount due on account of goods purchased or services received in the normal course of business.